Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulyas.
Oh my gosh, what could that be? Okay, you know what we're going to do today? We're going to talk about income tax horror stories. So, and for the next 2 weeks, we thought we'd talk about things that really should upset you, and that was our scream of horror. So I'm Esther Gulyas, the tax lady from EG Tax. We have 1 hour to talk about taxes and letters and did you make this October the 15th deadline? Anything happening in your life? Haven't gotten your refund? Wondering about what's going on? We're here to talk taxes, and we got Christopher Fabian and Tiffany Fabian back from Atlanta, Georgia. Y'all come back now, right?
That's right. We had a great time. I would say the weather was what shade of gray? It was gray skies the whole time, right, Chris?
Yeah.
And so, but anyways, it wasn't.
But let's face it. Right now, we're going to get out our mucklucks again.
Right.
Time to get out the Snuggies and everything because winter is coming back. I can't believe it. Like last week, you think winter's never coming back, but then
presto.
One day the weatherman says, "Oh no, it's going to be 32 degrees tonight." Yeah.
But
anyway,
and I gotta say,
wood burners.
Yes.
When we were in Georgia, we called Larry, and he was in Atlanta, and we were in Augusta, so it was about 2 hours away. And we decided next time we're going to meet. But I would love to
meet Larry from Atlanta, Larry from Georgia.
That's
I'm
right.
Esther Gulyas, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. We're going to talk about tax horror stories. But in the meantime, we want to talk about if you haven't registered yet, we have expanded our basic tax school to include a Saturday class, right?
That's right. Starting, believe it or not, on Halloween, speaking of screams. But on the 31st, we're going to have our crash course starting in Amherst. Runs about 6-7 weeks, right on Saturdays only. A great time.
From what time to what time, Chris?
9 to 3.
All right, so it's a longer period of time.
Longer period of time. That's why we can get it in a shorter period of weeks.
Right.
And there's also, if you want to, don't like classrooms and you want to do it yourself, there's still, you can do our online class. You can always do that.
Which is really exciting. This year, our enrolled agents class, we have a enrolled agents class that we offer to people that are looking to become enrolled agents. And it's a 3-part exam, closed book. And they bring you in this room, and you can't even, I don't think you can itch your nose, because it basically you get licensed with the Internal Revenue Service. Our first part of the enrolled agents class is going to be available also online, right?
Yep. That's going to be available online.
So should, again, you be somebody that's already a tax professional and you say, really, I would really like to become an enrolled agent, EG Tax offers an enrolled agents class, and we will be very happy to help you.
Yeah, I got to tell you, too, I was talking to Karen, who does the online class. There's a trend, and the classes that have filled up the most this year, the most popular are the night and the online classes are so popular this year. I'm talking about our basic classes, so you could see the way things are moving.
Well, because more people have jobs.
Right. That's right.
More people have jobs, and they're thinking maybe they'd enjoy doing this during tax season, and it's a great way to make extra income. It's a wonderful opportunity to really help people.
Yeah. Right. And, speaking of helping, I know last week you had Tim on the show, and boy, our phones rang off the wall this week. But one thing I want to say, with him, I'm sure he mentioned how Healthy Republic is falling to the wayside in this area, and people who signed up and nobody knows what to do. Well, he believes that you are going to be grandfathered in where you can still keep it. But the problem is a lot of doctors are dropping that insurance. So you may think, I can still have it. Great. Go to your doctor and they say, well, sorry, we don't take that anymore. So you got to do some more research. Talk to Tim.
I thought Health Republic went bankrupt, though.
They did, but they can't sell any new policies.
Okay, so they can take existing.
They can take existing, but doctors have canceled.
And that's the whole thing is that people, nothing's easy anymore, right? I mean, pretty much whenever you're dealing with the federal government, it's not easy. And that's part of what we want to do for people. If you're somebody that needs health insurance and you don't know what's going on, and sometimes people say, I don't want to know what's going on. Ignorance is not bliss, I'm going to tell you, folks. Part of what we do as a service to the general public is EG Tax offers free help. We get no kickbacks. We get no money. We're doing this to help you. And Tim is a navigator with the... Oh, I don't know what that was. Tim is a navigator with the New York State of Health. And all you have to do is call us at 632-7886, and we're very happy to help you to get the insurance that you need.
Yep.
Right?
Definitely.
Right. Wow, I thought the world was ending. Sorry.
It was part of Esther's scream. I didn't know it was still up.
All right, before we get to the horror stories, why don't we get to the phone calls? Why don't we talk to Ed in Amherst? Hey, Ed, how can we help you?
Uh-oh. I think I just lost Ed.
Oh, boy, Chris.
Chris did that.
That's what you call trigger finger Chris.
Horror stories. See, when you mention horror stories, what happens?
Call Chris back.
Ed, call back.
8030930. Let's go to Jim in Amherst.
Nope, both are gone.
Chris hit both buttons.
Oh, you killed them both?
I hit both buttons at the same time.
Oh,
it didn't
listen
like
to the...
He's just mashing the phone with his open palm over there.
All right, let's talk about horror stories. All right, number one, and this is so simple, using the wrong filing status. People, if for instance, if your income is taxable income is $18,000 and you should have filed head of the married filing jointly and you used a single, for instance, you paid an extra $500 in taxes. If your taxable income was like $150,000, you paid an extra $15,000 in taxes. That's a lot just by checking the wrong box.
Yep.
Right?
Yep. Definitely.
Now, how does somebody move from single to married, joint, or head of the household?
Well, first of all, being single to married, you got to say "I do." Those magic two
true,
words.
But let's say single to head of the household. And can you be alone and file head of the household with nobody living with you?
No. You got to have a qualifying dependent with you. Normally a child, but it could be also your parents, your brother.
It could be a qualifying relative. Like, for instance, let's say you're giving a home to mom. Even if she isn't living in your home and she's living on a home and you're paying the rent for her and you're maintaining over 50% of the cost of the house and mom doesn't have taxable income over her personal exemption, then mom would then be your dependent and you would move from married separate to head of the household.
Right.
That's right. And then don't forget, I just want to chime in, and don't forget, there's so many taxpayers, and I've amended returns after returns, and they don't get to claim their kids sometimes, but they still live with them, and because according to the divorce decree, the dad gets to claim them, so they will not claim the child for earned income credit, and sometimes they don't even claim head of household, but really they're the custodial parent. So in those divorce situations, you really got to be cautious.
Well, but in this case, even though you can't claim the dependent, if it's a child living in your home that would have qualified as a dependent but is given away to the non-custodial parent pursuant to a divorce decree or an 8332, you still get to file head of household.
Yep, that's right. That's right. And so you really...
And if you're listening and you didn't do it, hello, you have money coming back. Yep. Money coming back up till the last 3 years. So it's a lot of money.
Definitely.
Oh, my God, yes.
Right?
Yeah.
Okay, I think we got Ed back, right?
Yes. And there we
go. Hello, Ed.
Sorry, Ed.
So, Chris is a very brutal person, so we apologize, Ed.
He's been cleaning the garage all morning, so we got to give him a break.
How can we help you?
I had spent about $6,000 to have my basement repaired from water damage and stuff after the snowstorm last year. I was wondering if there's any way to recover that from my taxes or anything.
Well, maybe. And so maybe it's a casualty loss. You want to explain about what the casualty loss rules are for Ed?
Sure. The casualty loss is tucked away under Schedule A, so you generally would have to be an itemizer unless the loss is enough to boost you as an itemizer. And so on the Schedule A, there's medical, there's property taxes, there's interest, charity, and also there's a casualty and loss deduction. And now it has to super exceed 10% of your adjusted gross income plus $100. So at $6,000, I wanted to ask you, Ed, did insurance give you any money?
No.
Okay.
Did you go
So how
through
much
your
is your
insurance?
income, Ed? How much is your total
Retired.
income? Okay, but how much is your income?
Well,
All you have is Social Security?
No, it's around 40 or 45,000 a year.
All right, so they're going to take, if we're using 40, 10% off of your 6, which is going to be 4, and they're going to reduce it down to 2 minus 100, so you're going to potentially have a $1,900 casualty loss.
But did you go through your insurance company?
I called them, but they wouldn't cover it.
That's good.
So it's non-covered insurance.
Right.
So you'd have about a $1,900 casualty loss if you're an itemizer. Do you normally itemize?
No.
So now you have to take a look at whether with this casualty loss you're going to be over the standard deduction.
With your property taxes.
With your right. And your sales taxes. So if you can itemize and if this exceeds 10% of your adjusted gross income, which it sounds like it does, then will it save you any money? And you really have to do it both ways to figure it out.
Yeah. Well, I live in Amherst, so I got a lot of taxes.
Yeah, that's true. Are you married or single, Ed?
Pardon?
Are you married or single?
Married.
Okay, so you have a higher, and are you over the age of 65?
Yeah.
So you have a high standard deduction to get over.
Right, in order to be able to claim this. So it would be your itemized deductions plus the casualty loss totaled, and then compare it against your standard deduction. If that's more than your standard deduction, then you're going to save some money.
Okay, I see.
Okay?
All right, thank you very much.
Thank you, Ed. Thanks for calling. I'm Esther Golias, the tax lady from EG Tax. We're talking about tax horror situations because Halloween's coming up, right? And again, if you have any calls, any questions, any comments, 8030930, 8030930, star 930 on the cell phone. We're going to take a short break and see you on the other side.
Something strange in your neighborhood. Who you gonna call?
EG Tax.
We can do that.
Huh?
We can do that. I got to dub that over.
That's right. Anyway, I'm Esther Golias, the tax lady. We're getting ready for Halloween kind of in a funny way, but October the 15th was extension deadline, and we're talking about things that people do that really, you don't even know it. Is the tax return correct? Mathematically it is. Is it the best tax liability? Not really. And so we're talking about tax horror situations that people do that are so simple. Sometimes it's just checking the wrong box. And ignorance is bliss. You feel so good, but it's wrong. It's not the best answer that you can get.
You mean like letting your 20-year-old college student claim themselves?
That's right. Oh my
Isn't that
gosh,
true?
it drives us crazy.
It
drives us crazy. Okay, so on the flip side, by the way, 8030930, 8030930, star 930 on a cell phone. Love to hear what you have to say. How about if you're married filing a joint return and you really shouldn't? Like, let's say last year you had all dental implants done in your mouth, right? And those are really expensive. And your spouse maybe makes $50,000. You make $50,000, let's say, for instance. So if you file a joint return, your floor is going to be, if you're under the age of 65, 10% of your income, which is going to be $10,000. But if you file separately, then your floor is only going to be $5,000, right, to take the itemized deduction.
That's right.
So in this case, you might want to file married separately rather than married jointly.
Yeah.
And it doesn't mean you don't love your spouse. It means that you're just going to save maybe $500 to $2,000.
And another thing, Esther, I do this for many of my clients. There might be a married filing joint couple and they have 3 kids and they're all under the age of 17. And if they do joint, they lose all the child tax credit because their income is too high. But if you pull them apart and do married filing separate and one spouse doesn't make as much or nearly as much as the other, they get the child tax credit, and that can save a handful of money. Yeah, yep. So
that's the whole thing, I know everybody, especially now with the election cycle, and we got all these politicians talking about what they're going to do. Taxes are really confusing and really complicated, and it's not like if you decide to do this and you're thinking, well, this is right, it is right, but there's a righter right, if you understand what I'm saying. In other words, if you do this, it doesn't mean it's wrong, it is right. But if you do that, then it's even better. And so that's the whole thing when you're doing your tax planning. You have to understand how the whole thing fits together. Yeah. So even though you're married filing a joint return, maybe you want to file married separately because it saves you a lot of money.
That's right. That's right. And it's just, you know, all year you pay a lot of taxes. And so you really want to take every opportunity that's afforded to you by law if you can, you know.
Right.
And, you know, if you want to talk about with the filing, how about someone who files separate instead of joint because their spouse owes money to child support or...
That's right. And there's another thing. There's the innocent spouse ruling, right, Chris?
Right. Yeah.
So they can't go after... I mean, they do. So what happens is you file the form that says my spouse is an innocent spouse. It's not their obligation. And you file the form, and sometimes even when they process the return, they ignore the form. Then you call and say, hey, wait, we have that form in there. And they go, oh, that's right, we do owe you $2,000. And they send the money back.
Yep. Or a simple little thing when you do married filing separate and it says, did you live, and you get Social Security and it says, did you live with your spouse all year? And if you check yes, but you didn't live with your spouse, one way all your Social Security is taxable and another way it isn't.
Up to 85%. Right.
Yep. So you really want to check and answer the right boxes.
And then the other thing is not using your tax credits. For instance, how many people are listening that maybe made $2,000 or maybe nothing because maybe they're on separate maintenance from their spouse and they have kids living in their home, and had they got a job then they'd get an earned income credit. Now let's let everybody understand what an earned income credit is.
Chris?
The earned income credit is a refundable credit the government gives low-income people.
Lower income. Not even low income. 50,000 and under,
yep,
right?
with three or more children, yep. And it's a bonus you get on your tax return. The government gives you money to help you live throughout the year. So,
and if you don't have earned income, then you don't get the credit. So maybe this mom has been being a diligent person, but had she gotten $3,000 in wages, she would have gotten a refund of an additional maybe $2,000,
yep,
right?
And on New York State as well.
Yep. So that's another thing. So if you're somebody on that is not working with children that are with children under the age of 24, unless they're permanently disabled and full-time students, or under the age of 19, then you can get an earned income credit. So make sure you go get a part-time job.
Yep. And then I was talking to a young kid the other day, a college kid, and he made $6,000 a year, and nobody claims him as a dependent because the mom is disabled and doesn't work. And he didn't file because legally he didn't have to, but he had all these withholdings, and actually he went to college, now that I think about it too. So he didn't file because he didn't have to file, but he had all these withholdings.
So he had $1,000 coming back, assuming he had any tuition, right?
Yep.
He had $1,000 refundable credit. Plus, he probably got an earned income credit if he's over the age of how old?
He's Becca's age. He's 21.
All right, he's too young to get the earned income
24.
credit. But if you're over the age of 24, you'd get an earned income credit. So even though when you call up at tax time, you say, do I have to file? No, you don't have to file. Do you want to file? You better.
Yep.
Because there's money that they have coming for you that you just are leaving on the table.
Yeah,
right.
And then he couldn't find his W-2, so we did a request for transcripts with the IRS, and they got him his transcription. I'm filing his return, and he's happy.
Yay. Okay, I'm Esther Gilius, the tax lady, 8030930, star 930 on the cell phone, and we have Jim waiting in Williamsville. Hey, Jim. Hello, Jim.
Hello, how are you?
Good. What can we do for you?
So just want to know the strategy. In the previous segment, right, you were talking about, checking the correct box.
Right.
So I'm a guy who just moved to the area.
Okay.
Took a job here, right? I've got a spouse, a not working spouse. She takes care of our young child.
Right.
Just want to know the best strategy, right?
Well,
all right. So
let's ask you a couple questions.
So she doesn't work. She's a non-working person. She's taking care of the children. She's a homemaker. So generally, I would think married filing joint return would be the best thing to do. But let me ask you this. Are you somebody that uses your car in your job, have a lot of employee business expenses, or have personally incurred a lot of medical expenses?
No.
Okay, so in this case, would you guys not agree with me in his situation, because the 2% floor and the 10% floor are not in there, he should probably file married filing a joint return?
Correct.
Yep,
correct.
Absolutely.
And, I mean, because if you only have one child, you said, Jim?
Correct.
If your income's roughly about $35,000 or under, you would be entitled to the earned income credit. So for filing joint, if you file separate, you don't get that.
And I wanted to say, Jim, that checking the right box starts when you start your job and filling out your W-4 correctly. And you know, if you made what Chris made, maybe you're checking the wrong box and withholding too much money. So that checking the box, wrong box, right box is a very lengthy thought process. You know.
So what Tiffany's saying is that if you over withhold and you reduce the amount of withholding that increase the amount of withholding that you send to the IRS, you make your monthly living expenses less because you're sending the money off to the IRS. So that's another thing that you want to look at. And also, did they pay for your moving expenses to get here?
They did.
They did completely.
I spent personally about $3,000.
Okay, so you're gonna do a 3903, which is a moving expense adjustment. So your mileage, the tolls, the hotels on the way, storage, everything that they didn't pay except for your temporary living expenses will be deductible, even if you don't itemize.
Got it. Now I didn't claim anybody.
We're going to have to hold him over because the news
we got a news break, a hard break right here. Will you hang on?
I put him on hold. So
all right. I'm Esther Golias, the tax lady. 8030930 star 930 on a cell phone. We're breaking for news. We'll see you on the other side.
You got it, Esther.
Hey, yeah! Esther Golias, the tax lady. 8030930, 8030930. Tyler Samer's always tripping me up. I never, because he usually plays things like the toilet bowl upstairs or something, some kind of band like that.
Don't make fun of my bands, Esther.
No, let's face it, Tyler. You know, you have these obscure bands. Nobody can ever guess who they are. Anyway, we're talking about tax horror stories because we're coming on to Halloween, and we want to talk about situations where people are letting thousands of dollars sit on the shelf at the IRS because they did it wrong. They didn't know, and we're trying to help you out. 8030930, 8030930 star 930 on your cell phone. You know, Chris, I think you alluded to parents letting their kids claim themselves who are going to college. I mean, not. Right. Claim the college credit.
Right. Well, where the kids think they can and they do it, and the parents go, okay. And, you know, it ends up where the parents lose about $3,000 a year.
And the kids illegally take $1,000, right?
Yep.
And, you know,
it's
if I had a kid in college and I was entitled to $4,000 and my kid just got $1,000 and I was going to get $3,000, I would amend the return and get the money back. I mean, if anybody came up to you on the street with a gun and said, give me $3,000, you'd be offended. But, you know, voluntarily, we do that kind of stuff.
Yep. You got to pay attention to the whole story and get it done and get it done right, because they're not going to call you and say, hey, you made a mistake. Yeah. We owe you money.
That's right. We could have given you more money if your kid didn't claim himself. And, you know, the way I solved this whole thing is let Junior keep the $1,000, you amend the return, and, in other words, out of your refund, you pay them the $1,000. The family collectively is ahead of the game, right?
Yep.
All right, and the other thing I want to talk to you before we get to the phones, 8030930 star 930 on a cell phone, is the child care credit in conjunction with an employee cafeteria plan. Explain why it's better to go through the cafeteria plan.
Well, because it is a before-tax deduction, so you not only save income tax, this before-tax deduction, you also save Social Security and Medicare tax. So if you're in the 15% bracket, you're saving 15% tax, you're saving 7.65% Social Security, and you're saving, we'll say, 6% New York State.
And you actually get to take more out, correct?
Yep.
An extra $1,000.
That's right. So you can put in.
So you figure now on top of everything, you got another $1,000 that would have gotten a credit, and it's at your tax bracket. So if you're in the 35% bracket, you're going to get $3,350 plus the $700. I mean 7.85%. So you're saving like $300, right? With the state for $350. And so you say, okay, $350 here, $1,000 here, $2,000 here, $1,000 here. I mean, holy moly!
Yep.
That's right.
Yep.
Right?
Definitely, it adds up really fast.
It does. All right, and that's why this is a great time. As a matter of fact, this because it's fall. You're not going to believe what I did. Do I like to cook?
No.
All right. You know what I did today?
You cooked?
I made apple roses.
Ooh, it smelled delicious.
I know, with cinnamon, because it smells so good and it feels like fall. And I mean, they were really easy.
Did you want to finish with Jim with checking the box?
Oh, I guess so. We have to talk about taxes.
Okay, Jim, you're back on.
All right, Jim, how can we help you?
No, Jim
was carrying over.
You
from
wanted
break.
to ask him about moving.
Right. That's right. So where did you move from, Jim?
From Brooklyn, New York.
Oh, so you're New York to New York.
Yeah, that's right.
But it's more than 50 miles.
You're not going to have to pay, so you're going to still pay New York State taxes. But in Brooklyn, is that not a borough of New York City?
It is. So
you're not going to have to pay that New York City tax.
Yay.
Right. So that
and
goes
isn't
away.
it great to not be stuck in the traffic?
Yeah, I mean 2 hours to get to work versus 15 minutes.
I mean, Western New York is a wonderful place.
But when you file the tax return, don't forget to take advantage of the moving credit if you're entitled to it. And what other things would be good to look out for? If you bought a house, did you buy a new house?
Come
when you
here
moved
for job hunting, things like that.
All right.
Yeah,
Thanks for holding. I'm Esther Golias, the tax lady from EG Tax. We're going to take a short break. We'll be back on the other side. Okay, Tyler, it's the Toilet Bowl upstairs. What's the name of the group?
No, this one's easy. It's the Red Walls.
Oh, of course it is. I'm Esther Golias, the tax lady, 8030930, 8030930. I know we got a lot of calls holding, but I'll tell you, here's the big one, the big horror. You are somebody that's entitled to put money into your pension plan at work, and your employer will match it. Okay, and you don't do it. Now, let's say you make $40,000 and the employer will do a 3% match. That's $1,200. If you don't put $1,200 in your pension plan,
Auntie Esther's going to haunt you.
Away $1,200. Even if you took the $1,200 out, it's going to cost you like $150 in taxes, but you get the $1,200. So it's like,
you're gonna,
please, please, if you got an employer match, go do it.
That's right. My goodness.
Okay, I'm going to talk to Tony on line 2. Hey, Tony, how can we help you?
Yeah, the Consumer Reports that over $21 million is left on the table by people who don't maximize. That was a Consumer Report article.
Because,
2 months
a
ago.
lot of people, Tony, you can lead a horse to water, but you can't make them drink. And a lot of people think that they aren't entitled. It's like last week we were talking about, you could have $200,000 in the bank and a paid-for house, and you have not much income except for Social Security, and you'd qualify for Medicaid, and they aren't making the phone call.
Yeah, Esther, I missed the beginning of the show because I was raking leaves, to be honest.
Well, Tony?
And I know that, in the history of your show, inception of your show, I've never missed any one of your shows.
Oh. Well, there you go. Just because you're raking leaves, what a flimsy excuse.
Yeah, I was raking leaves, and during the week, a friend of mine called me, and he was quite distressed. He said he got a letter from something called Health Republic Care. And in the letter, it said that his policy would be canceled as of the 1st of December.
Right. That contradicts what Chris said, sort of.
He would have to take and find a new policy somewhere else. Now, I told him I had never heard of this before, so I'm asking for help.
Well, see, Health Republic effectively went bankrupt last year because they had the cheapest rates, and they were really a great insurance company.
They were one of the ones on the marketplace.
Chris has just been and this is a very fluid thing. So what's happening is that, Chris, you just reported that Health Republic will keep its existing
the existing clients are supposed to be grandfathered in to still have their insurance. They're not able, Health Republic is not able to sell to new people right now. But the problem, Tony, is that a lot of doctors are afraid to take Health Republic as an insurance because they think they're not going to get paid, so they're dropping the...
So that gives me pause, what your friend said in the letter, because it sounded like he already had Health Republic, and they're sending him a letter saying that they're...
No, his policy's been canceled.
Yeah,
okay, but this is what I'd suggest you do. Tony,
where did Chris get the information?
From Tim.
But you talked to Tim the other day, right,
Tony?
Yeah, but Tim never called me back after our initial talk.
Okay.
Well,
so he's been really busy. But have your buddy call Tim, so Tim can give him the lowdown. And we certainly, we're trying to give the best information as we get it, but we understand that they will still keep him.
Chris raises
insured.
a good point. If the physicians and the practitioners won't take it, that's
it's
real
no
problem.
good to have it. So,
well,
but somebody
Chris,
will.
Where
Somebody's
did you
get
the grandfather part? I couldn't hear that. You didn't cite the article.
It wasn't an article. Tim called Health Republic themselves.
They said that they would grandfather these people
Correct.
in? Well, how could they do that if they're bankrupt?
Well, no.
In bankruptcy doesn't mean that your business folded up. It just means that you're in a reorganization and that your creditors are accepting reductions in payments and conciliations in payments. So
the reason I say this is because the last program, I heard part of it, and the gentleman that was speaking started complaining about the fact that this was a friend of a lady friend of his called and said she got the same letter, and he said that she told him that she would have to find another way to get insured because the company was going bankrupt.
So, Tony, all we know is what our navigator told us, and he was informed by the New York State of Health that Health Republic is like on its last legs, and they are still going to insure people who are already insured. So what I'd suggest your buddy do is call Tim at the office, 632-7886, and we'll be very happy to do what we can to keep your buddy insured with Health Republic.
And I'll tell Tim to give you a call, Tony. I apologize.
Okay, because Tiffany knows
Tiffany, it's good to hear your voice.
Hi, Tony.
I thought you were being left out of it on purpose.
No, they still allow me.
Tell your husband to give you a chance to answer a question for goodness
I
sake.
know. I know.
He's taking and hogging the whole line here.
That's right. That's me.
And by the way, Tyler, play more Michael Jackson because it's appropriate. Take care. I love you all. Don't get me wrong. I love each and every one of you. And I'll tell you,
thanks, Tony.
We love you.
Anyone who's listened to the program as long as I have learned something, at least one thing.
That's our goal.
Tony.
Thanks, Tony.
God bless.
Okay,
God
we're
bless.
going to go to Marty in Depew on line 3. Hey, Marty, how can we help you?
Hey, I have a quick question. I was just curious if I brought 2 amended returns in, very simple format, if you could give me an estimate.
Sure.
I'm assuming it would be about $45 a return, so about $90 for the 2.
Okay, because I'm at this, I had the dilemma, not a dilemma, the government's handing me money, and I didn't even realize that I could claim the earned income credit.
Yeah.
Well,
have
so
a
you got a
disability.
nice chunk of change coming back. The federal government will pay you back with interest, not so much on the state of New York,
But you
also
also
have money coming back on New York State.
Yeah,
And our amended return charge is $45 plus any other
For the federal
returns
and
we
the
go.
state.
So,
That's
so
90
you
total.
should be very happy.
Yeah, because I always was hesitant. I did the H&R e-form, e-file, and they're telling me for $19.99 more, we can get you $460. So I always said, nah, I can't claim it. But so I clicked that link back in the early springtime, and sure enough, I was entitled to it. So, ironically, this year I don't pay nothing because I have a very small SSD payment.
But
and
you have wages, Marty?
it's a small retirement pension.
Okay,
It's
but
under
disabled?
500.
You're retired because you're...
Did you retire at what age?
57.
All right, so it sounds like he's one of those exceptions where you're going to be able to change the code to a code that would move his retirement up to wages, which would qualify him to get the earned income credit.
Yes,
Right,
but
that's
that's
what
what
it sounds
H&R
like.
Block told me, and I didn't realize for the last couple of years.
Yep, so you want to get in and get your return amended and get your money.
But okay, so you would say 45 would be
Yep.
simple plug
Yep.
and play. There's only the AGI, blah, blah. No taxes have been withheld
Right.
this year because I don't pay nothing.
And your
Right.
child lives with you, correct?
What's that?
Your child lives with you?
No, this isn't. That's what I was always. No,
Okay, so
I have-
you're
I have grown children.
so this would
I was
be,
at the
he's
very
under
bottom,
the,
'cause I-
He's
they
under
he would
the...
get it
my
for a
disability
non-child.
pension
That's right.
income.
Earned income credit. Okay, yeah.
Yep, that's
It's not
fine.
as much money, but it is
It's
money.
Like it was like $460 plus
Right,
110
that's-
from New York State.
Right,
I'm looking
your
at
money.
$1,000.
That's
Your
right.
money.
Years.
Absolutely.
On the table. Don't leave it there.
All right,
Right.
Marty, thanks for
My
calling.
question was what, like a ballpark figure, what you would charge.
And
Yeah,
that's
but
what-
I would think for the 2 years, $90.
Okay, that sounds good. Well, thanks for the information.
All right,
You're
thanks,
welcome.
Marty.
Marty.
Thanks for
Marty.
listening. I'm Esther Golias, the tax lady, 8030930, 8030930. We got Mary from Buffalo on line 4. Hey, Mary. Mary, how can we help you?
Hello?
Hello, dear.
Oh, hi, how are you? I just have a question about the earned income. Okay, so my daughter is 24, and she worked in New York State from January, 1st of this year until the end of May. And then she moved to Tennessee, and she's working down there.
Mm-hmm.
And so when she files her taxes, next January or whatever, she turned 24 in April of 2015. Can she claim that earned income credit?
You have to, does she have children living with her?
No, she doesn't. She's independent.
Okay, so there's two types of earned income credits. Earned income credits for people who have children living in their home that are their dependents or live in their home. And then there's an earned income credit for people who have lower income. So I'm assuming that she has income over $12,000, correct?
Well, I'm not sure because she's just working part-time, and she's actually going to school full-time, so she's,
All right,
living
so
kind of skin and
if
bone.
she has income, I think it's going to be almost 13 this year, right?
Okay.
Right.
So if she's a single lady with income under $13,000, she'd be able to get a small earned income credit on her federal return because she's on her own, and she'll be able to get a credit. Is she getting her undergraduate degree or a
No,
graduate
wait, you said
degree?
she's 24?
Her grad,
She
yes,
turned
she's
24.
She won't get
She
EIC.
turned 24.
She's got to be
Yeah, she
25.
has to be, yeah, she has to be
25. She turned 24.
But she'd be able to get she's an undergraduate degree, you said?
No, she's getting a graduate degree.
Okay, then she won't get that's not a refundable credit either. The
Lifetime
but she
American
could-
adjustment to
Opportunity
income.
Tax Credit is a refundable credit for undergraduates. She would get a credit, but it's not going to be refundable. So she won't get the earned income credit or the
American
Opportunity Tax Credit.
Okay, so should she do an amended return for her returns that she did so far?
No, because she wasn't old enough. But was she in 2015? Was she working on her bachelor's?
She was, yes.
So you
mean,
didn't
14.
claim her as a dependent?
Actually, we did, yes. But you can't do it, right?
All right.
But
So you
this
got
year
the
she was-
credit. Did you do the American Opportunity Tax Credit?
I have no idea. I'd have to check with my accountant.
All right. It's very important because that's a lot of money.
But it doesn't sound like she should amend it because you claimed her as a dependent,
right.
Mary.
Right. So she doesn't claim it. So what is the age then? I mean, if she's independent now,
she has to be
herself.
25 without
kids. So she has to be 25 to get the earned income credit on her own, but she'd have to have a lower income. And in order for her to do the refundable American Opportunity Tax Credit, she has to be in the first 4 years of continuing education before her getting her master's degree.
Oh, I see. Okay.
Okay?
Okay, great. Thank you very much.
Thanks. Mary. Thanks. I'm Esther Golias, the tax lady, 803-0930, 803-0930. We got Dennis hanging in here from East Aurora. Hey, Dennis, how can we help you?
I'm wondering, this question has to do with gambling, winning, and losses.
Uh-huh.
Recently, I won $25,000 at a casino. Good for you. But I don't use my card, in the machines. So, and I don't know how much you know about this, but if you don't use your card, your losses are not recorded on your card and therefore on your statement. Mm-hmm. You know anything about this?
Correct. Okay, well, here's the thing. You can reconstruct or come up with what you would have lost at the casino or wherever you gambled and come up with a log, and you must have some proof, I would assume, of what you would have lost during the year. It would make a lot of sense to start using your card because your card would validate from an Internal Revenue Service perspective your losses.
Okay, well, I do have because a lot of times I go to the casino and I have money in my checking account. Now, there's a cashier at the casino, and many, many times I've gone to the cashier and withdrawn like 500 times, more than one time in the night, sometimes up to $1,000, $2,000 in one night. And I have the actual, the printout from the cashier. For example, let's say...
Well, that helps. Wouldn't you agree?
I would say that would agree. Yep.
But here's the thing that's important.
I can't prove. Now, these also show up on my checking account statement. So,
right. Well, that's proof. But then, Dennis, here's the thing. All the small wins that you would have had, that would be income too. So, in other words...
Well, they don't show... Well, yeah.
I know, but you have to be able to say, I won 1,000, I lost 4,000. So you have a $3,000 loss. So that's part of what you need to do when you're coming up with your figures. Is it's not only just the losses, but you won some money too in between. Okay. So you have to come back and are you using your card on the wins or not? No.
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 So all those small wins offset all of your small losses.
But even the I would have small wins when I did use my card. I might have small wins on my statement from the casino, maybe to the tune of a couple $1,000s. However, if it's legitimate for use to use the money that I take from the cashier when I go in at the casino. Now, there's really when I look at it and I say to myself, well, there's really no proof that just because I withdrew that money from my checking account at the casino, there's really no proof that I lost the money there, although it's logical. If you look at my bank statement, I mean...
Well, and that's where your log comes in, because your log would be your written proof of what you did with the money.
What do you mean? I don't know what you mean by log.
Like a mileage log book.
In other words, it's a log where you say, I was there January the 15th, I took $2,000 out at the end of the month. At the end of the night, I had $300 less. I lost $1,700. And that's what you have to do. If you're not using the card, then you have to come up with a logbook.
And that's what I do for my mileage.
And if you don't have it, then all the income you received is fully taxable, and you can't take any expenses.
Where do I get this logbook from?
You make it.
A notebook you buy at Walgreens, Rite Aid.
Well,
you make it, Dennis.
Wouldn't my checking account statement?
Nope. You have to come up with a logbook.
No.
You have to come up with a logbook. And so that's why a lot of people use the card, because it's a digital digital
you're right.
log of what your winnings and losses are.
You are right. I can't argue with that. But I did lose the money. I won $25,000, and probably over the year, I'm sure I lost probably $40,000.
All right, so let's do it this way, Dennis. Call us. We'll help you to get your logbook together. You can reconstruct it, and you can use your bank statements.
Of copying it from my statement.
It's a pain in the keister. It's much easier to use the card, but we can help you. And
don't forget a lot of your Social Security.
I believe it would help.
And also, one more quick question.
I ran out of
go on hold. Well, Chris and I will answer it. Hold on, Dennis.
Hang on. We'll get you. We'll put you on hold. I'm Esther Golias, the tax lady, 803-0930, 803-0930. If you need us next Saturday during the week, 632-7886. If you need help, egtax.com. We're here to help you. Have a great week. Bye-bye.